Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future. Welcome to this week's installment of Sterling Insights. I'm your host, Roger Silk. We are joined today by Stephen Wagner. Stephen is a CFP and a CEPA. He's the founder of Integrity Wealth Advisors in Ventura County, California. Steve has over 40 years in the industry, and Integrity has over $300 million in assets under management. Stephen specializes in working with high net worth clients and particularly business owners on wealth, legacy, and exit planning strategies. Steve's a seasoned fiduciary, a former college instructor, and a leader in exit planning. Steve, it's a pleasure to have you with us.
Well, thank you so much, Roger. The pleasure is all mine.
Let's start by, if you don't mind, just give us a little bit of background on yourself and on the firm.
I got started in the financial services business as a 19-year-old. My neighbor across the street from where I grew up was a retired New York Life insurance salesman. And we'd have conversations about what I wanted to do with my life. He started talking about this thing called a whole life policy. It was amazing to a 19-year-old to think that you could put money into a insurance policy and not only have a death benefit, but have a retirement benefit as well. That really got my interest going. A couple of years later, I became an agent for Equitable Life. After doing that for several years, I just kind of grew unhappy with just selling life insurance. I was sitting down with families and solving financial problems such as, retirement issues and other financial planning questions that the family may have had. And I said, you know what, I should really be doing more with my life than just selling insurance. And so in 1987, I signed up for the Certified Financial Planning Designation class. And 2 years later, I got that. And a couple of years later, I started the firm that is known as Integrity Wealth Advisors at this day.
So in 1987, you got the CFA. And tell us a little bit about the CEPA, the Certified Exit Planning.
Yeah. So CEPA sounds like an exotic animal down in Australia, but it's not. It's, as you mentioned, a Certified Exit Planning Advisor. And I obtained that a couple of years ago because, being older, being in the business a long time and having clients a long time who own businesses, they're all starting to get to the point in their life where they are thinking about exiting their business, selling their business. How does one go about doing that? So I felt some nuanced education would help with the experience that I've already had in running a business for all these years. And so I obtained the CEPA designation, and that's been very, very useful.
I think it's a relatively new designation. I think the whole area of exit planning is a little bit new.
Yep.
I want to say a few words about that for people who maybe are not as familiar with it as they should be or will become. So CEPA, CEPA, Certified Exit Planning Advisor. And I think a lot of people might not be as familiar with what exit planning is about, even business owners, as maybe they could be or should be.
Exactly. So let me throw out what really got me motivated to get this designation. There's a statistic out there that 80% of all small businesses that are put up for sale, 80% never sell. And interestingly enough, 75% of the 20% that do sell, 75% of those business owners 1 year later regret the sale. And 80% of the time, it has essentially little or no value. So the CEPA, what a CEPA does is understand what an outside buyer wants to see in a business. What are the qualities of that business? What are the structures of that business? All of those kinds of things and much more go into creating a business that is ready for sale. So that's what a CEPA does, and that's what, our message to business owners are. You're great at what you do. There's no question about that. You become successful. But does somebody else want to buy what you created? And Roger, let me give you just one quick example of a practical illustration of why that's important. So many business owners are the CEO of their business, but they're also the number one salesperson. So he or she has all of the relationships with all of the key contacts. So what happens the day that person walks away from the business? What is that business really worth? Well, the answer is little to nothing. You've got to create, and I'm speaking of CEPAs, we create an environment where that business owner becomes replaceable. And that's just one of the main roles of a CEPA and why business planning is so important prior to a sale.
So how does being a CEPA and providing that advisory service, how does that fit with being an asset manager? Everybody understands how asset managers get paid. You get paid a percentage of assets, but a lot of business owners, their main asset is the business. It's not a liquid account that you can manage. So how do you handle that dual mandate?
Well, fair question. Our ADV allows us to, charge a flat fee for certain services. We charge hourly. We'll charge for a project, and we'll charge a typical fee, as you related, as other advisors do, for managing client assets. But to your point, the vast majority of every business owner's assets typically are tied up in their business, which is, of course, illiquid. Obviously, there's other assets that often are managed by us. We'll handle their 401k plan, for example. We will likely have written a financial plan for a fee for that business owner. And we feel we do a really good job of communicating with our clients, offering a wide variety of education-based services throughout the year. When it comes time for that business owner to sell the business, we're also going to work with them on creating an environment where maybe some of that business is going to be placed in a charitable trust, for example, or maybe the business structure isn't the right structure today that would allow for 100% of the profits from that business to be considered long-term capital gains. That's a real big problem with some business structures. And business owners, they'll go through all of this to sell a business, and then their CPA will tell them, well, part of your sale price is considered ordinary income. How's that for a gut punch? So we work through all of that. And we feel at the end of the day, when all is said and done, they're appreciative of that and will wind up more often than not managing those assets from the sale of his life's work.
Stephen, what is an ideal client for you? In other words, the people out there who you are best suited to help, who would those people be? How would they recognize themselves and say, hey, maybe I should be getting in touch with Stephen?
Yeah, I think it's that business owner that, is obviously within a few years of wanting to sell their business. I think, too, the quality of the business owner is important, and obviously not to be judgmental. That's not my point here, but not all business owners are created equal. So we're interested in business owners that, have a history of creating a great culture at their business, treating their employees and vendors in a good way, obviously being very above board and ethical in their dealings. We find that those kinds of clients appreciate the work that we're doing and that are willing to look beyond just next week, next month, or next year, want to be in a long-term relationship with an advisor like ourselves, our team, for example. We consider ourselves educators and coaches. not just typical, quote, wealth managers, unquote. Business owners don't know what they don't know. I don't know anything about plumbing or electrical work. I just know that it needs to be done. Business owners are great at what they do, but they don't really know outside of their business very often the tax laws, the estate planning techniques, and obviously the correct way to position your life's work check that you get from selling the business in a portfolio that will last as long as you do and longer. And so those are the kind of folks that we tend to really click with and unite with.
Is there a certain business size measured either by revenue or profit or employees that you tend to find you can add the most value?
Certainly larger companies. Of course, we know, look, I'm not talking about the Googles of the world or Microsofts or even publicly traded small cap companies that might have hundreds of employees. Those folks, by and large, already have access to really good estate planning attorneys and wealth managers. The void is really down the food chain. Mom and pop, they run a business. Maybe they've got one of their kids involved. Maybe they've got a really good key employee. There might be 10 or 15 or 20 or 30 people. They are not sophisticated in the sense that much larger organizations are sophisticated. And this is where we can really help. We can locate inefficiencies, money saved, for example, time saved, and certainly bring to the table the high-end estate planning and tax and investment philosophies and advice that they ordinarily are not able to be presented with because of their size.
And you're talking, if we talk business value, put some numbers on that.
Oh, look, I mean, I would say, companies that are generating in the $2 to $4 million annual revenue is kind of the area that we find a lot of our clients. Our largest client recently sold his business for $25 million. So those are the areas that, really don't have access to really good, nuanced advice. And that's our market. That's what we're going after. So I would say, 2 to 3 million in revenue all the way up to 20 to 30 million in revenue is our sweet spot.
And then that obviously depends on the business, what that translates into cash flow or EBITDA or whatever you want to call it. It astounds me how you mentioned earlier small cap, which these days is like multi-billions, I think.
Exactly. Pretty funny.
It really is. I remember, when we started in the business 40 years ago or whatever, small cap might have been what is really almost now. You had public companies in those days with market caps of less than 100 million. And
oh, absolutely.
Now it's rare to see it less than 500 million or $1 billion, I think.
Exactly. And anything smaller than that is considered trash. It's incredible.
Well, yeah, or at least, the term I've heard is sort of like lower middle market, right? It's definitely got a market. The numbers are just, they're just mind-boggling. There are individual human beings out there who are worth like $100 billion, which is mind-boggling. And I totally understand what you're saying because we deal with a lot of those same people too, and they can benefit from the good advice more because, if you have $1 billion or some huge number, it's not going to change your life if you have 2 billion.
Exactly.
Whereas
I love that point. That's a wonderful point. And I think that's one of the lessons that we help our clients with too is, how much is enough? What is your enough? Okay. And so it all starts with that. We'll look at what their personal assets are. We'll try to figure out a rough valuation of their business. So what is your wealth gap? What do you need to be comfortable? And it's amazing, to your very good point. Even if you go down even lower, forget about $1 billion to 2 billion, 500 million or 100 million to 200 million. What difference does that really make in a person's life? And so we try to get people to look at wealth management in a more holistic way. How is this going to affect your family and benefit your family, your charitable organizations, all of these other goals and aspirations that you have for the next 2 or 3 or 4 generations? Because we literally can help clients affect that. which is really exciting. And I think once people realize that, look, this is enough, they don't have to worry about, well, I want more, because that's one of the biggest problems that we have, especially in investing. And when you get into a great big bull market, people make a lot of money, but then what do they want? Well, they want more. There's fear and greed, and greed,
right,
raises its ugly head. Even though it looks like a beautiful woman, it's not a good thing. That can cause as much damage as the bad decisions that are made when people are very fearful. So, our job is not just educating people about where they are today and what do they need to do to get to where they want to be when they want to sell their business or retire, but it's also helping them to have the right view of money, how to view money in the most healthy and beneficial way. And we're real proud of that goal.
Would you say, and I totally understand what you're saying, would you say that concomitant with that, if somebody is selling a business for, say, 10 million, which is a lot of money,
mm-hmm.
and they're in California, for example, which is where you are.
Sure.
The difference between good planning and bad planning could be the difference between 10 million and 6 million or 5.
I agree. Yep.
And based on, I don't know what your experience is, but to me, there really is. Those are huge differences. In some ways, bigger than the difference between the 100 and the 200 that you were talking about a minute
mm-hmm.
ago.
Mm-hmm. Absolutely.
Get the idea that, I'm putting words into your mouth, but we talked before. You definitely want to help them. If they can get 10 and keep it, or as much of it as they can, and then grow it so that they can achieve what they need to achieve. Yeah. Is that a fair statement?
Absolutely. And, there's a great book out there. It's called The Psychology of Investing. You may have heard of it. Morgan Housel is the author. And he talks about that in really, really good detail and uses real life examples of folks that thought that, they needed more, and so this is a book that we actually give out to our clients, every one of our clients in this situation. And we say, look, read this. This is really important. This is going to help you have the right view of money, especially when we are telling them you have enough, and we do know when they have enough. And sometimes, to your point, they don't agree because they want more. And books like that can be very, very beneficial in helping to protect what they have and enjoy the same life that they would have had they had double.
Right. I think they're both real, right? The psychology of it really matters because you don't want to have somebody who's objectively got enough money, but say feels like she doesn't have enough because then she's worried, even though there's no objective reason to worry, she's not enjoying life. And we all see these people all the time, right? They've got more than they can ever spend in any realistic scenario, but they still worry. And I think that's actually a big area where advisors can add value, even though it's not necessarily measurable dollars and cents. It's psychological.
It's an intangible value, but an important one if you can get someone to relax, enjoy what they have, and realize that they're not going to run out of money and there's going to be plenty for the next generation. Those are, your point is very, very well taken, Roger.
Now, you specialize in high net worth, and we talked about businesses, but in terms of the net worth of the clients, what's that sweet spot for you in terms of somebody's listening to say, hey, am I in the Stephen's sweet spot? Just put some numbers on that net worth range that you guys are kind of focusing on.
Absolutely. So, high net worth is a term thrown about like a rag doll these days. Yeah. It's how do you define what is high net worth? There's, some parts of California where high net worth would be, $25 million and above. We don't work with a lot of clients that are $25 million and above. I've always been a believer as an advisor that everybody deserves really good advice all the way up the food chain and sometimes even more importantly, all the way down the food chain. So our view is, high net worth to us is probably someone in the 3 to 5 million arena. But obviously we work with clients below that area because it is the right thing to do. As a businessman who started out with nothing, I can't ever remember saying no to a potential client when I was just a little skinny kid in my late 20s, early 30s. You took what you could. And it's that philosophy that continues with our firm today. We don't have minimums here, and we're not ashamed of that. I've got other advisors, and one of them is a young advisor, so she's able to work with some of these lower net worth clients that are going to turn into very high net worth clients later. Some of my best clients have been people that had $100,000 and have come to me over the years, but they knew a lot of people that had a lot more than that. Or down the road, they inherited $2 or $3 million. How are those apples? So our view is we mean this. Yes, there are clients that we spend more time with because they have more complexity, but every client gets the same level of excellent advice and attention to what is needed for them, whether it's a $500,000 account or a $10 million account. It's not the zeros, it's the person. And we really, truly believe that.
I really like that. That's a really great point. Yeah, thank you for sharing that. Well, we're running out of time here. Stephen, is there anything that you would particularly like the audience to know or to hear that we haven't had a chance to touch on yet?
Yeah, I think one of the areas that I think, business owner clients that have built up a pretty good business and that are looking at a sale, that have charitable inclinations, I think that is an area of the tax law that is just absolutely beautiful. And it's an area that we enjoy. I'll tell you, one of our initiatives, Roger, is that we're big believers in giving locally, local charitable organizations. And so we've interviewed a wide variety of, and will continue to do, local CEOs of charitable organizations. And we interview them for, 5-7 minutes. It's on our website. And it's a place our clients can go to say, okay, yeah, you want me to give locally? Well, who are these people? Well, they can learn about them there. Most of these business owners, most of these high net worth folks that we work with, they have local charities that they really love, okay, that they've given to throughout their lives, maybe in very small amounts, but now they have the opportunity to do it in much larger amounts. And to your point earlier, what's the difference between a 10 million check and a 6 million check? It's a big difference, isn't it? Well, we can eliminate a lot of those taxes with some really good charitable planning, as an example, and not cut the family out. So I would say that would be an area that business owners and other high net worth individuals should be looking at more closely. And it really isn't going to hurt your overall net worth or your family's legacy if done properly.
And I would just add to that, Stephen, so we're very involved in that area. And done properly, it can really enhance your net worth.
Agreed. Yep, absolutely agreed.
Where can our audience go to learn more about you and more about Integrity? Sure.
iwaplan.com is a good place to go. That's our web presence. And then 805-339-0760. You can look us up on Instagram and LinkedIn as well. Absolutely. Web address is iwaplan.com. And then the phone number is 805-339-60.
Stephen, thank you very much.
It's my pleasure, Roger. Thank you for having us on.
Thank you for listening to another episode of Sterling Insights. Stand out and supercharge your assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.